Welcome back to the Everyday Finance Podcast, where we are working with the everyday person to maintain financial security and establish financial independence. My name is Alexander. I'm a South Florida realtor specializing in the Boca Del Rey area. And today we're going to be answering a very important question, and that's, is the real estate market going to crash? Now, I'm going to first pass it off to Garen before I give my professional opinion. He's a former tenant account manager, as well as an aspiring real estate investor himself. So what do you have to say about this?
So is real estate going to crash? It's a very interesting question. Well, we could start with like the basics here. Just a few months ago, we saw that there was like an insane surge in the housing sale price and in the actual frequency of sales of houses as well. Meaning that there were a bunch of listings that were up and everybody was trying to sell their house. And the prices for housing also skyrocketed. At the moment, the market has actually slowed down a little bit in the sales and the actual frequency of listings, yet prices still kind of remain high. So is this a potential lead into a crash? I don't know. What do you think, Alex?
Well, I can definitely tell you, you're definitely right with a lot of things that you just mentioned. And what I notice is going over the trends in my local area, and it's different everywhere, but I noticed this in the state and the country that, what Garen mentioned, housing sales did pick up, but also at the same time, in this area, at least over the last several months, basically every house that came on the market in that month was also sold in that month, leaving basically nothing left over for a backlog. And even though less houses are hitting the market now, we're still having that where basically every single house is sold. And the only stuff that stays on the market throughout the month is going to be something that's vastly overpriced. And, this does lead to concerns like how Garen mentioned, and I see it every day.
I've actually been hearing a lot of people talk about waiting to buy right now, or waiting to, purchase a new property, or waiting to make a new investment in real estate. And, we've spoken in previous episodes of the podcast where we said, markets can be measured and reflected by essentially consumer emotion. So, it's a little alarming and concerning to hear a lot of people kind of saying that they want to wait a little bit or wait until the market drops. I've been hearing that a lot. And this makes me ask the massive question, the big alarm, why are people so wary?
Well, you see, I think it plays into a lot of things, but I think you're right. You do hear this, and the truth is your average individual home buyer could actually crash the market if everyone decided they didn't want real estate tomorrow. But, back to your question is why that is. And I think it comes down to a lot of facts and myths that are out there that, people aren't really factoring in. They're not understanding as why the home prices are so high. Like I talked about, there's everything gets sold. So one of the myths that's very common is, people say, well, there's no inventory. There's nothing out there to buy. Well, it's not true. Like I said, there's plenty of houses hitting the market. The only problem is they're getting sold very quickly. And also when people go out to search, another thing that's a fact that people are mentioning is that, home prices are at all-time highs. And what people were expecting to get, a year or two or three ago, now they look for those same properties, run the same searches with the same criteria, and almost nothing shows up. It's because their quality of property has now moved on to the next price bracket, and they've basically gotten priced out of the market. And, before we list anything else about misconceptions or facts, I wanted to mention that what Garen was saying about people waiting to buy a house. If you need to buy a house, if you're currently renting, I don't think waiting is actually the best option because, well, if you just need a house, home prices, they're still going up. Inflation is still going up. Your money is worth less every year. And, judging by those factors, if you're going to spend away paying someone else's mortgage while these home values still go up, you're better off just paying the high home prices now, even if stuff starts to relax a little bit later.
At the same time, just kind of reeling it back into the actual pricing and the understanding of why the market is so, I guess we could call it inflated right now. The few reasons that I've found is actually that, as we know, inflation has absolutely been blowing up the asset markets of recent. And this also has been increasing the cost of resources, which is also a problem because that also transcends into shipping and freight constraints that we've been having, where there has been a bottleneck essentially placed on all inventory and products and resources that are being shipped from overseas, which of course you need for the construction of housing. And, we can look at even the prices of resources. Lumber at the moment is priced somewhere about $610 per 1,000 board feet. And back in 2018, 2019, just 3 years ago, 4 years ago, 2 years ago, the price of lumber was nearly half. It was like $340. So we're seeing a skyrocket in the cost of resources. We're seeing bottlenecks in shipping and freight. And then at the same time, we're also seeing consumer demand increase. Now, with consumer demand increasing, there are two reactions that the market will have. Either prices will increase until consumer demand starts diminishing, or supply will increase until consumer demand starts diminishing. Now, the combination of both of these two things are happening right now, which is a big issue because at some point, you're going to reach the top. Now, the question really lies at whether or not we've already reached the top.
Right. And I think that's a great question. I think that brings me back to another great myth that I'd like to mention right off the bat after I just told you that maybe you shouldn't wait is, it's one that I find in the real estate profession quite a bit. And, that's, I put it as a little joke here. It's real estate to the moon. Rocket emojis. But, realistically, some agents, they seem to think, real estate's never going to go down. Nothing's affecting it. And there's a lot of reasons why it may not crash. But at the same time, we do need to understand and we need to look out, even if you decide that it's very much worth it for you to buy real estate, is that, well, markets can crash at any time and we can't predict it. Like I said, even the average individual could crash the real estate market if the right circumstances arose. Very many things can happen, but I think the most important thing about real estate is that it's very slow. And if you're expecting to wait around for it, you're going to need to understand that. And the only time you're going to see those fast movements are going to be in those tragic times.
Now, this isn't always a bad thing, though, because it's all about preparation. If and when the market does crash, having additional cash on hand or being able to go ahead and go get a loan or a mortgage or something using your line of credit can be super beneficial because you can buy properties at almost half off. It's like going to Macy's and getting a 50% off deal on a Calvin Klein shirt that you like or whatever, just obviously at a much larger scale, but it's the same idea behind it. You're getting something at half off. Now, the utility behind it is that the house is actually an investment. So when you do have this house, the typically housing markets do continue to increase, kind of like the stock markets, similar to all asset markets. And basically, the real estate price for that property is going to continue to increase. And if you've purchased it at a 50% discount, tying with inflation, time, and demand and increasing population, your property will be worth more in the future. So it's not always a bad thing to have cash on hand in order to be able to purchase when a crash does occur.
Right. And, I think Garen mentioning that brought me into a perfect segue to talk about why people are actually worried about the real estate market crashing. And honestly, I think there's one simple answer, and that's just that the prices have gone up fast. They've just gone up fast. It's shocked people. And they see prices that, like I said, they expect way different qualities of properties for the price that's being asked. But the reason people think the market's going to crash, or the reason people are worried about it, is because they don't understand why the prices are high. Now, Garen just mentioned about interest rates, about real estate markets, about inflation. All of those individual things play into effect here. Real estate markets, they're greatly affected by inflation because everything is. The inflation's affected all these materials, like Garen said. Demand is up while supply is down. And right now we're at a deficit of houses here in America, and builders are rushing to fill that void. And it's going to take years by any projections to produce the amount of houses that we're at the deficit now. And honestly, millions of people come into this country every year and come to stay. So we're going to need to ramp up that production. And guess what? Like Aaron said, the cost of it is going up. And that raises basically the average cost, the expected cost. Newer stuff costs more. And that means if it cost less in the past to build these other properties, that means they were cheaper for the person before. They can sell it for more now. They're competing with these new higher priced properties. Inflation's continuing to go up. And guess what? Like Garen said, interest rates are still low. You know, right now, if you're going to wait around, the market has been going up fast, but inflation's been going up fast. And if you're looking to wait around, if you even wait like 1 month, we've seen months in this real estate market go up 3-4% in the real estate market, which is crazy. But if you think about it like that, you wait 1 month and pay 4% more for your property, where instead you could just go ahead and take your loan and you only get charged like 3% a year. And that's very common. You know, if you look up the national interest rates by the Fed, the numbers come out lower, but what you get on a mortgage is always different.
100%. Now, the smartest thing that you can do is actually using your credit as leverage in this situation. Right now, you know, we have been talking about interest rates being low, and the best thing that you could do if there is a crash that does occur is to go to your bank and beg them for a mortgage. Because, and you can thank me later, 10, 15 years down the line when you've double, tripled, if not quadrupled your money. But we'll talk about that at another time.
Yeah, definitely. And you know what? That's another thing is about the real estate market crashing. People worry about 2008 and the factors that played into that. Now, the similarities really only come from where we're at in the pricing and the fact that the real estate market is quite ferocious right now. And those are realistically the only similarities, because back in 2008, the lending practices were extremely loose, as well as actually predatory, giving stuff to people that really had no financial means to take care of the property they were getting lent on.
Oh,
but for
100%.
these businesses, for these companies, it was worth it. They'd give you the loan, they'd repossess it in a year or two, and it'd be worth more by that time. So to them, you know, you'd pay out in that amount of time, whatever you did, they'd take it back, they'd keep your money and make a profit on the house at the same time. So for them, it was perfect. But right now, we're not seeing such predatory practices. And also, we're not seeing the Fed come out and say that they're going to be raising up interest rates, which once again would affect how many people can actually afford these new expensive properties. And, you know, another thing is that we're seeing these factors be quite light in ways that, you know, the Fed realizes people are a little anxious, a little nervous, so they don't want to make these big statements. Because realistically, if you're worried about the market crashing, these are the things you want to look out for. You want to look out for the interest rates going up. You want to look out for, of course, you know, all the lending practices tightening up. You know, if the big banks giving out the mortgages all of a sudden decide we don't really want to give anyone any mortgages, well, that takes the buyers out of the market. You want to look for stuff like that, and or going the other way, making the real estate practices for the mortgages so extremely loose that basically anyone can get a mortgage. Now that whips the market up into a frenzy, but we're not seeing that right now.
Yeah.
And these are things you want to pay attention to, as well as hyper localized things. Because here's another thing. You know, I work here in the state of Florida, in the South Florida region, and real estate's fantastic here. But everything that I'm saying is based off of a national level and a local level. Now, in your area, everything could be completely different than the national statistics and even further different from the statistics in my area. So you need to look at what's happening in your local area and, you know, make yourself, you know, one of the utmost professionals of, you know, the real estate property that you're looking for. And you'll be able to decide whether it's the proper time to make that investment now or later.
The best thing to do is, yes, to take your time. I love that you said that. Just because rushing any investment, and you have to think of your home as an investment, rushing any investment can lead you to make mistakes. And mistakes are what ultimately put you out of the game. Now, whether or not, you know, you take 3 months to make that decision, or 3 years to make that decision, that's up to you. But really, rushing a major purchase like this should be at the end of your totem pole. You should do a lot of you should conduct a lot of due diligence and make sure that you know everything that you want, need, or are looking for out of your property. Because without any of that, you sure the price might go up, but you might also hate where you live.
You know what? I actually couldn't agree with that anymore. And probably one of the easiest ways to make sure that all that care and due diligence is done properly and for you is, well, by hiring a licensed professional, such as a realtor in your area. They're going to understand the market there better than anyone else because they're doing far more transactions than your average homeowner. And they do this every single day with different kinds of people and different price brackets. And they're going to be there as a fiduciary to you to make sure you make the best financial decision possible.
With that being said, I would also like to let you know that if you are in the South Florida area, you can contact Alexander Padron through Keller Williams Realty, and he'll be glad to help you out.
And that I certainly will. Now, before we close out the video, I'd like to just give a little bit of my own opinion here. And, that's if you're asking this question yourself, is the real estate market about to crash? Are you worried about this? Personally, I think no. Not right now. Not the way things are looking in the market. We got a lot of deficit of properties that needs to be built up and a lot of people coming into my state, coming into this country, and it's going to take some time. Inflation's not slowing down, and realistically, the market could slow down. It could top off, but I don't think it's going to crash. Real estate's slow. It'll move slowly. Other economic factors can come and go without really affecting real estate big time. Things can happen in the stock market, those quick little drops that everyone freaks out about. Those things will happen that you see looks like a massive drop on the stock charts and it doesn't even touch real estate. It's almost like it never happened. So realistically, things can come and go. And I think you shouldn't worry too much. If you need a property, you should go ahead and get it because the interest rates are low. And right now, these buyers, they're looking for good prices. They're looking to get out of there. And right now, the renting market's crazy. So I don't think the market's going to crash. You might use up a lot of your money renting. And I think if you find the property that's right for you, you should go ahead and buy it.
100%. I agree with you, Alex.
Definitely. Well, thanks, Garen. And thanks for tuning in, everyone, once again to the Everyday Finance Podcast, where we are working with the everyday person to maintain financial security and establish financial independence.